Traders, FX Pip Collector here. Today is Monday, January 20th, and we're going to be looking at the US dollar pairs, including gold, and we're also going to take a look at a couple of the JPY pairs. I'd like to start off with the US dollar index and looking at the news calendar so we can be ready for the day. If you haven't done so already, definitely join my free Discord trading community. It is 100% free to join. Never had to pay a dime if you do not want to. If you would like to join my membership, then you get access to all the benefits listed down here below. You join at fxpipcollector.com and it is only $30 per month for all the benefits listed below. So anyways, I'd like to start off real quick by looking at the news calendar. Now, Mondays are normally a pretty slow day, and today is a bank holiday in the U.S. So the U.S. stock markets are going to be closed today, and the U.S. banks are going to be closed today. Normally during a bank holiday, you get a very, 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 very slow market. So we have to be a little bit cautious. It could be very slow today, but today is the day that President Trump takes office. I believe it is right around 5 p.m. UK time or noon Eastern Standard Time that he will be taking office. And because of that, we definitely could see a lot of volatility this afternoon and maybe some pretty wild swings, maybe some false breaks. So definitely be careful. I mean, these type of days, there is definitely a little bit of an uncertainty of what exactly could happen. So definitely be aware of that and be careful of that. So anyways, looking at the US dollar index, I mean, nothing's really changed, but I still like to check this out at least once a day to remind myself what it is that I'm looking at, because if I know what the US dollar is doing, then I basically know where all the US dollar pairs are doing. So this first big trend down, I think, is a wave A. I still think this is one, two, three waves up here for an A of B, one, two, three waves down for a B of B, and I still think this is likely a wave C. I think this is either a running flat wave C, which if it is a running flat wave C, then this definitely could be the area where it turns down. Or possibly it's going to turn into an extended flat. If it turns into an extended flat, then it will take out the previous highs and it will continue to make higher highs, higher lows. So keep in mind that this wave B is definitely not proven to be over. I mean, yeah, we did bounce our head off to 78%, but if you zoom in a little bit, we definitely don't have a breaker structure to the downside yet. We definitely don't have any significant lower highs yet. There's no reason at all to say that this trend may not just make another three-way pullback and just continue the uptrend. And the trend is your friend as always. So let's move on. Let's get started on the euro dollar. Pretty much the same story as last week, at least on the daily time frame. The market has been very slow on the euro dollar. We have one, two, three, four sideways candles, four doji candles in a row. Kind of seems like the market's getting waiting for Trump's inauguration today, that's for sure. Technically, the trend is down until we get a breaker structure, and I definitely would still recommend looking for shorts on shorter time frames. We got our Fibonacci retracement out here just in case we do get three waves up and a Fibonacci bounce, where we could possibly go short again on the shorter time frames. So going down to the 1 hour time frame and zooming out a little bit, I mean, not much has changed. Like I said, the price action was very overlapping and very slow last week, but I still think that this is likely either an A or maybe if we're lucky a wave one. I still think we have a wave B or a wave two, and I still would suggest that if you do get a Fibonacci bounce or if you get a bounce at a Fibonacci level with a breaker structure, then it's likely a wave C. If it just goes up and doesn't break structure, maybe bounces but doesn't break, but instead goes up and breaks this higher time frame structure, then that tells you that it's probably not a wave C, that it probably is a wave 3. So I personally would definitely suggest still primarily trying to focus on shorting opportunities. Like I was just showing you on the US dollar, these trends are definitely not proven to be over. The higher time frames are definitely still telling you that it's in a downtrend. And as always, the trend is your friend, so we're going to try to learn and hopefully earn at the same time, whether this is an A or a 1, a B or a 2, or a 3 or a C. So moving on to the pound dollar. The pound dollar has been very weak for the last couple of weeks ever since they had some negative pound news. I mean, even this last leg right here looks very strong to the downside. So I would say there's a very good chance that this is not the bottom right here. I would say that's very, very likely not the bottom of anything. Now, just like the other pairs, it might make a move up. And if it does decide to go up and break structure, then great. I will definitely turn into a buyer, but I would definitely still assume then anything I see to the upside is likely just another correction to the last wave down. So keeping that in mind, we'll take it down to the 1 hour time frame. Very, very sideways, very, very corrective. On the pound dollar, I would definitely still suggest looking for shorts. I mean, just like the other pairs, I still kind of think there's a good chance it's going to go up and make a wave C or possibly a wave 3. This would be like an A or 1. This is all like a corrective B or a corrective 2. But we have to be careful because the momentum is definitely down on this pair, and it doesn't even have to go up at all to make a 3 or a C. It could potentially just keep on going down. That's why I would definitely suggest to everybody to continue to look for shorts because this thing could continue its downtrend at any time. As long as it doesn't go up here and break structure, I think that your primary focus definitely still should be looking for shorts at the end of any three-way pullbacks, especially. Moving on to the Aussie dollar. Aussie dollar definitely did make a little bit of an impulsive move up, but the trend is definitely still down. No breaker structure up yet. No significant higher low yet. The trend is definitely down. Just like the other pairs, this thing could just keep on going and going and going. So I, just like the other ones, would definitely suggest still looking for shorts in a downtrend. Now, going to the 1 hour time frame does make you think that it could go up because it just like the other pairs, it looks like a impulsive up, wave A or 1. Looks like corrective down, wave B or wave 2. Just like the other ones, it looks like it should go up and either make a C, which a wave C would bounce from a fib and continue down, giving you likely a break of structure, helping to confirm that it really is a wave C, or maybe it really is a wave 3 and it just goes up and breaks structure, which would be great news for us because that would likely tell us that we have a change in trend on the higher time frames. So we're still trying to determine whether this is a wave 3 or wave C. I would definitely still be suggesting looking for shorts and hopefully learning and earning whether it's a wave 3 or a wave C. I don't analyze the Kiwi dollar, so let's move on to the US dollar CAD. US dollar, the Kiwi dollar is literally exactly the same as the US dollar CAD. So the US dollar CAD, I mean, last week I've been telling you guys to continue to look for longs, and then what happened is it went up and made another brand new high. And there's still no reason to think that it's not over. Now, I still think that this right here is possibly a wave 5 of wave 3. I still think that this right here is likely a wave A, and this is actually still a wave B. And I still think there's a chance it goes down and makes a C, and this would be a wave 4, right? Because this right here would be the end of a wave 3, and then eventually back up for a wave 5. And then that's when we're likely to get the big turn that we're waiting for. So keep that in mind. Let's take it down to the 1 hour time frame. Now, even though I just gave you that analysis that has this going down, I am personally not sorting it. Why? Because even though it's still, to me, kind of looks like we got a break of structure right here, which would be an A, it still looks to me like we got three waves up, which would likely be a wave B. We are at the 100% Fibonacci extension. The only thing that would even convince me remotely to go short is if this thing did this, made a double top, went down and broke structure. If it does that, then I could justify going short on these sort of time frames. Otherwise, I would always suggest to trade with the trend because this could go up, make a bounce, make another higher low, go up, make another higher low, and just keep on going up, making higher highs, higher lows. So, as always, the trend is your friend, and I would always suggest trading with the trend of the higher time frames. US dollar Swiss, yeah, I mean, just like the other pairs, there's no breaker structure to the downside. The last structure level is way over here. So this thing would have to go all the way down here and break structure to prove to me that the trend is going down. I do think that we are in a wave A or a wave 1 if you zoom out a little bit, and most wave A's, most wave 1s do take out the high of wave 4, which we have not done yet. So I definitely still think there's going to be some more upside potential. Just like the other ones, though, I do kind of think there's a good chance that it is going to go down, make a more proper looking correction before it goes up. But trying to bet on the short side against such a strong uptrend is very dangerous as always. So going down to the 1 hour time frame. zoom back out a little bit, is where I got my Fibonacci retracement on the last push down. I mean, to me, it still looks like a downtrend. I still think it looks like an A. I still think it looks like a B. I still think it needs to go down to make a wave C, which would probably go down to make a higher low compared to this, and then probably head back up. So I still think that this is the most likely scenario based on the 1 hour time frame. But I also have really been trying to suggest to people to not really worry too much about going short because the trend is up. Our targets on the higher time frame have definitely not been hit. And this thing, even though it looks like it should make an ABC, it literally could just keep on going and going and going. And if you're looking for logs the whole time, you're kind of ignoring any sorting opportunities, but instead you just try to go long at the end of every single pullback you see. I guarantee that you're going to be much more profitable in the long run. So moving on to gold. Now, gold is probably definitely going to be affected by today's inauguration too, I would say. To me, it looks like gold is, this is an A. It looks like we're in a wave B right now, and there's still no proof the wave B is over. Most wave Bs do take out the structure of the previous move, so it does still kind of seem likely that it will go up, take out these highs, potentially before it starts a bigger downtrend for the wave C of wave 4. Then you would have an A, a B, and a C of wave 4. So yeah, no signs of it being over. I mean, if it goes up, makes a double top, and then turns down, then breaks structure, that would definitely tell me to start looking for sorts. But we do not see that picture yet. Going down to the 1 hour time frame is where I got my Fibonacci retracement on the last impulsive move up. And honestly, we kind of already made 3 waves down, didn't we? We already got a 50% fib bounce, and the fact that the trend is up, I mean, hopefully you guys are long or either looking for longs. Now, yeah, I mean, it's going to be some very uncertain day because of the election, I think, because the inauguration that is. So be careful. I mean, this thing could move up and down and make false movements in either direction. But the trend is up, and I would highly suggest continuing to look for longs until the higher roadmap time frames tell you otherwise. I mean, if anything, it kind of seems like this is probably going to go up and make like a wave 5. Maybe this is a 1, 2, this is like a 3, this is a big wave 4, and now we're in a wave 5 from the trend that started back here at the end of this last ABC correction. So definitely still suggesting to look for logs at the end of pullbacks. Moving on to the US dollar yen. The US dollar yen definitely could be like an expanding flat. And what I mean by that is we got like a higher high wave B possibly, and then this could be like a wave C right here that could possibly keep going up, especially looking at the dollar index. But for me, I'm trying not to overthink it too much when it comes to Elliott wave count. I mean, because it definitely just looks like 1, 2, 3, 4, 5. I think that slow market we got here is more because of the holidays we had in December, not because that it's a wave B. And I think that that means that this is a real break to the downside, and it's probably now telling us that we should be looking for sorts because there's probably a good chance that this is going to go down and make a wave C of an A, B, C correction now. So that potentially could give us a lot of really good sorting opportunities if that is correct. So going down to the 1 hour time frame, I mean, yeah, we definitely do have a break on the 1 hour. And if you do trade the very short time frames, you could be trying to go long. But I personally would suggest to anybody to look for sorts. We got our Fibonacci retracement on the last impulsive move down. I would personally be looking at my Fibonacci levels very closely. If we get some sort of a double top situation, some sort of a push down, I definitely would suggest sorting it if you do get a chance. And like I showed you on the higher time phase, this may actually be a change of direction on the daily. We may actually be just near the beginning of a big downtrend. So I would suggest paying very close attention to your Fibonacci levels and looking for sorts at the end of every 3-way pullback you see. Moving on to the Euro Yen. The Euro Yen, I mean, there is definitely a chance that this move down is a correction to this move up, which is why I got my Fibonacci retracement on here. But you'll notice that this bounce right here was not at a Fibonacci level. So what does that tell me? That tells me there's a very good chance this move up is probably a correction to the last leg down, and it's probably going to keep on going down, at least for now, overall. Doesn't mean that it may not pull back for a few days, but overall, I think it will continue down. So on the 1 hour time frame, I got my Fibonacci retracement on this last push down. I'm watching my Fibonacci retracement levels very, very closely. If we get some sort of a double top at any one of these levels with a nice impulsive down, nice break of structure, you better believe that I will be going short because we may be already going down for a big wave C of wave 4 on like the weekly time frame, which would be a really, really big move to the downside, especially because we're talking about like the weekly, monthly time frame. So moving on to the pound yen, going back up to the daily time frame. Now the pound yen, especially because of the pound, has been very strong to the downside. Now, we actually went beyond the 78% of this move up right here. Normally, when you go beyond the 78% of any given an impulsive move, it sometimes does bounce, but normally it will take out the 100% also. So, overall, definitely still looking for longs. This little push up we're getting right now is probably just going to be another correction to the last wave down. So let's take it right down to the 1 hour time frame, which is where we got our Fibonacci retracement on that last leg down. We got our Fibonacci from here to here. We are looking for Fibonacci bounces, which we got a pretty nice little Fib bounce this morning. We'll have to see if that really is the end of the correction or not. I think that today's inauguration definitely could affect the yen and the Swiss and maybe even the Aussie Kiwi because they're risk on, risk off pairs. So be a little bit cautious today. Definitely some uncertainty in the market. If this goes down and breaks structure, it should confirm the short. If it doesn't, it could definitely end up drifting to a higher Fibonacci level before it actually does end up continuing down. But even if it does go up again, shouldn't be too big of a deal because you know that if it gives you another Fib bounce, then it should just be another opportunity to go short, especially if you see like a little double top break of structure type thing at a Fibonacci level. So as far as the rest of these pairs are concerned, I do analyze every single thing on this list every single day for my members. I do a live stream on Zoom every single Tuesday, Wednesday, Thursday, and Friday at 1 p.m. UK time or 8 a.m. Eastern Standard Time. I also share every single trade that I take with my members at the time of entry. And yeah, it gets you access to the members only channels on Discord and the free included trading course. So my website is fxpipcollector.com if you'd like to check that out. If not, then definitely join my 100% free Discord trading community. There's a lot of really good traders on there that are willing to help each other out. So as always, I hope everybody enjoys the rest of the day and happy trading.